Welcome back. You're watching Market Fatafat on ET Now, show where we get you all the stocks buzzing based on news flow as well as technicals. And talking about technicals, now we have Kunal Rambhia joining us on the show. A very good afternoon to you, Kunal. Thank you so much for joining us on ET Now. And firstly, a very happy Diwali to you and to everyone at the streets who are working with you. But let's get started with the stocks that you are actually tracking, and that is Escorts. Kubota is your first stock that you're tracking for us on the chart. How much more higher will Escorts Kubota go?
Thank you so much for your wonderful wishes, and wish you the same to your entire team of ET Now and all our viewers. So if you look at the Escorts first, look at the consolidation. It's been almost 20 days. This counter is in sideways consolidation of 3200 as the resistance, and the support being 3050 to 3060. Today was the first day where it tried attempting, the breakout of this consolidation zone. It came down as of now. That seems to be the retesting. I think this can be a good level to initiate the buy. Keep the stop loss of around 3120, and one can initiate a buy at the present level with the stop loss with the target of 3250 to 3300 levels.
Okay, keeping an eye out on those levels for Escorts Kubota. Let's move on and talk about Apex Frozen. This one is a focus on the back of its numbers. Subdued day of trade coming in after the numbers were nothing exciting. When you saw the revenue, that's down by almost 22%. Even in terms of the profits of the company, we've seen a sharp decline in terms of the profits of around 39%. Operationally, also seems like a weak set of numbers that came in because the EBITDA stood at just 18.6 crores versus 27.8 crores last year. So that's a decline of 33%, and margins a contraction of around 130 basis point in terms of contraction of EBITDA margins at 7.7%. So weak set of numbers reported by the company. Stock doing nothing great in trade as well, down almost 3% in trade, almost at the day's close point as of now.
All right, moving on, let's talk about Global Health or Medanta, that is in focus in today's trading session. Yes, on back of earnings also, a lot of brokers have come out with a note on that particular counter, but you have Kotak Securities, which has actually gone ahead and downgraded the stock to reduce rating from an ad rating that was set previously, where they've also set a target price of 885 rupees per share, which actually implied a decline of about 6.9% from the last closing price that it basically traded at. And as you can see, the stock right now trading low by about 3% on back of that downgrade coming in from Kotak Securities to reduce from an ad rating.
Okay, let's keep an eye out on Global Health. Let's move on and talk about the next stock then, that is Nalco, Kunal. And on the charts, what's Nalco now indicating? Where should we expect it to go?
So if you look at the result day, that was just 2 days back, the counter came down by almost 4%, and it hit the perfect support level of around 90. And from there, in the last 2 days, this counter has bounced back again. I think this trend which we are witnessing on the counter since almost 6 to 7 months may just remain intact. Keeping that in mind, I think one can initiate a buy at the present level. The stop loss will be 91, and the first target will be 96, followed by 98. And we'll keep trailing the stop loss, as you know, this has been a favorite counter and a trending counter. No need to book the profit, keep trailing the stop loss on this.
All right, that's the take coming in on Nalco. Lisa, let's talk about ONGC and why is this particular counter in focus today?
Yes, so basis the results, Prabhudas Leeladhar, they came out with a note on ONGC, and they have a buy rating on the stock at a target price of 237. Now, what they mentioned is that on the back of the windfall tax, post that the net oil realization that is likely to be maintained at $70 to $75 per barrel, while the gas prices that has been capped at around 6.5 US dollar. Per BTU. So this provides comfort on the realization front. So talking about the result, the oil and gas production, it fell around 1%, and even the total volume that is expected to increase, and this is with the commencement from KG Basin, as well as they have estimated 4% CAGR growth as well as 6% CAGR growth in oil and gas production respectively. And currently the stock is trading at around 4.7 times on FY25 earnings. So that's according to Prabhudas Leeladhar, and they have maintained a target price of around 237. But basis the results and quite okay numbers coming in from ONGC, we can see that the stock is trading flat in today's session.
Let's move on and talk about Asian Paints, because that one has been subdued for a very long period of time now, Kunal. So on the charts, what is Asian Paints now indicating? Finally, could we expect a coat of green for Asian Paints?
So as you rightly mentioned, this counter is being subdued, and in fact, from 3,500 levels, we saw the decline till almost around 3,000 levels. But now, from the low levels, this counter has bounced by almost 3%, and it's been 4 days. It's in sideways consolidation on the technical front. We call it as a flag formation. It's poised for a breakout now. I think this level can be a good level to initiate the buy. Stop loss will be 3,050 on this counter. One can expect the first immediate short-term target of 3,150, followed by 3,300 levels.
All right, moving on then. Ansh, let's talk about Power Mech and why is this counter in focus today?
So the stock is actually trading flat, but it is 2% up from its day's low. Company has reported strong financial number with consolidated revenue surging to 932 crore, which is up by 21% on year-on-year basis. Company's EBITDA sees a significant rise, reaching 113 crore, marking a 30% increase. EBITDA margins stand at 12.1%, showing year-on-year improvement from 11.2%. Profit stands at 51.2 crore, a notable 17% year-on-year growth seen here. If you see the charts, stock seems to have given a breakout from 3-session consolidation. It has also been making higher highs from last 6 consecutive sessions, and the stock has snapped 3-month falling streak as of now.
Okay, let's move on and talk about Eicher Motors. This one is in focus today, trading with gains of more than 1% as of now. After CLSA has come out with a note, they maintained buy rating. They've hiked the target price to 4,252 rupees from previous 4,151 rupees per share. And yes, the stock is much more than 1%. It's 2% uptick that we're seeing. Now, overall, what CLSA is highlighting that Royal Enfield, overall the numbers that beat expectations. The demand for Royal Enfield motorcycle has also been quite strong. That is something that could support the growth for Eicher Motors. And overall, Royal Enfield plans a slew of new disruptive products over the next 12 months to maintain its market share. So yes, that's a positive sign over there. And other than that, VECV business is also on track to deliver a strong result this time as well. So on the back of that, we're seeing focus coming in on Eicher Motors today, trading with gains of 2%.
All right, moving on, let's talk about Jubilant Pharmova, and that particular counter is in focus in today's trading session, and it's not in focus on back of its earnings, but on another news development. At one point in time, the stock was trading higher by about 6.5%. The company said that its unit has gotten a US FDA approval for the ANDA for preparation kit of a drug used for treating breast as well as skin cancer. So on back of that particular US FDA approval coming in, we can see that the stock was trading with strong gains about 6.5% or so. Now the stock is holding on to gains about 1.7%.
Okay, let's move on and talk about Bajaj Finance on the charts. Kunal, what are the charts indicating for Bajaj Finance now? Where do you see it headed?
So again, a very muted counter and a sideways consolidation counter. But if you notice the recent performance of this entire month of November, it's been around 13 days. This counter is making a clear higher top, higher bottom formation. And recently, again, it made a just higher bottom in today's session itself, and now, quickly turning near to the high of the day. So I think this can be a good sign. One can accumulate this counter with the stop loss of 1550, and the first target on this can be 1640, and post that again we'll keep revising the targets.
Moving on, Lisa, let's talk about Sun TV, and that particular counter is a buzz on back of good earnings.
Yes, correct, Cheryl. Sun TV has reported good set of numbers, and we can see that reflecting in the stock price as well. It's up around 3%. Talking about the revenue, it was up around 27%, and it was mainly supported from movie business, though the ad revenue that saw a slight dip, and it declined mainly owing to lower spending as well as sporting events. Talking about the EBITDA, that also the margin saw a good expansion. It stood at around 69% versus 65% last year, and it was mainly driven by the movie business. But as I said, the advertising revenue remained weak, so that kind of offset the EBITDA margin. And continued investment in multiple non-fiction shows in South India as well as primetime fiction, that is expected to help the fiction shows help retain its viewership. And Prabhudas Leeladhar also came out with a note on the stock, and they have maintained a buy on the stock at a target price of around 750. So we can see Sun TV, it's up and above in trade in today's session.
Let's move on, talk about Wockhardt, and this one is in focus on the back of charts. Kunal, we've seen a strong up move coming in the last 6 months, 55% return. Are you expecting a further upside now?
So, this is the counter which we discussed previous month when it was trading at around 240. Not much discussed counter, and it was in sideways consolidation today. It first gave, the first time it gave the breakout, and it made a high of 52 weeks high. Now, this broader consolidation which we witnessed on the chart for almost 6 to 7 months is coming to an end. I think this is a beginning of a new rally. One can initiate a buy. Just wait for a day, I would say, because it's a fresh breakout. So we'll just wait for a day and we'll see whether it holds 265, 270 mark. If yes, then we can initiate a buy with the stop loss of 255, and the first target on this can be 315 mark.
All right, on that note, actually we'll slip into a break on this edition of Market Fatafat. When we come back, we'll continue with the journey of taking through all the buzzes in trade, so don't go anywhere.
Welcome back, and you're watching Market Fatafat on ET. Now let's keep it going with all the stocks that are buzzing in trade. Anansh, LIC is the stock that you've picked out for us. Why is this one in focus today?
So the company has reported a decrease in net premium income reaching 1,07,876 crore, which is actually down by 18.7% on year-on-year basis. GNPA percentage improves to 2.43%, showing a slight 5 basis point reduction actually. GNPA stands at 11,644 crore, which is down by 0.8% on quarter-on-quarter basis. The solvency ratio increases slightly to 1.9. The expenses of management ratio rose to 17.2% compared to 12.88% previously. Net profit also saw a decrease of around 49% to 8,030 crores. Also, if you see the chart, the stock has been declining for third consecutive session, and also yesterday during Muhurat trading actually, a stock gave a decisive breakdown from an uptrend.
All right, Kunal. Coming to you, let's talk about ICICI Prudential Life. How is this one looking to you on the charts? Because today actually we've seen some of them under pressure, isn't it?
Certainly yes, but if you look at the overall performance of this counter since a month, it's been in sideways consolidation, making the curve formation, and in today's decline also it's available right onto the support, and that support is placed at around 521.22. It made a low of around 522, which was on the support level itself, and now it has bounced back to 525. I think this can be a good bargain buying opportunity from the long-term point of view. One can initiate a buy at the present level. Stop loss will be 518, and one can expect the first target of 540 followed by 560.
All right, moving on, let's talk about Tata Chemicals then, and this particular counter is in focus and under pressure in today's trading session. You have Kotak Securities, which has come up with a note where they've actually gone ahead and downgraded the stock to a sell from a reduced rating. They've also set a target of around 790 rupees per share, which implies about 18% decrease from the last closing price coming in for Tata Chemicals. Remember that when Tata Chemicals reported its earnings, they were below estimates as well. So on back of that, you can see the stock that is under pressure. You have a downgrade also that's come in on post its earnings, and 1.6% downtick coming in for Tata Chemicals.
Okay, that is Tata Chemicals for all. But let's move on, talk about ICICI Bank and Kunal. ICICI Bank, what's the view on this one? What are the charts now indicating for ICICI Bank?
So if you look at the formation on the chart, it's been sideways to negative consolidation since a quite long time. And if you look at the recent formation, it's making higher top, higher bottom formation. But in today's session also, it's holding on to the previous support, which is at around 930. Again, if I look at the Bank Nifty chart, it's showing a good breakout. So considering that, I think this can be a good trading bet. One can initiate a buy at the present level. Stop loss will be 928, and the first target on this can be 948. It's just a trading bet. Above 948, we can go positional, but we'll share the views early.
That is ICICI Bank for you, but let's talk about what Prashant Jain has to actually say about the banking space and what does he expect of the larger banks going ahead. Listen in.
If you look back, there was a clear divide between corporate and retail banks, and the corporate banks were suffering because of high corporate NPAs, and they got derated to absolutely low levels, and therefore as a result all the money crowded into the retail banks and they became terribly expensive. A 4-time, 5-time price to book for a retail bank, it's a good bank, is very expensive because the ROEs are capped at the end of the day. But as the NPA cycle resolved and the real strength, the profitability of the corporate banks was evident, these banks have done extremely well. So you can see those banks have moved up 3 to 4x. So I think what has happened that excess valuations in the retail banks, that has corrected, leading to underperformance. And this always happens because when there is scarcity of growth, growth becomes expensive. When growth becomes cheaper, available elsewhere, that excess is corrected. So I think that is what has played out. And that's why you will see the derating of the retail, erstwhile retail banks.
Okay, let's move on from banks and then talk about SAIL and Ansh. Why is this one in focus today?
The company has recorded robust Q2 numbers with revenue reaching 29,712 crores, which is up by over 13% on year-on-year basis. Company has turned profitable with a net profit of 1,305 crore, a substantial improvement from a loss of 329 crore in the same period last year. Notably, the EBITDA margin experiences a significant uplift, reaching 13%, up by over 1,000 basis points. EBITDA stands at 3,875 crore, reflecting impressive year-on-year growth of over 400%. But despite of all the positive, stock is trading 1.5% down today.
Alright, so that is SAIL for you, and that was indeed the last stock on this edition of Market Fatafat. Thank you so much, Kunal, Nagaraj, as well as Ansha and Lisa for joining us on the show and taking our viewers through all the stocks that are buzzing in trade. With that, we wind down on this edition of Market Fatafat. But before we sign off, here's what Sunil Singhania has to say about investing in small caps, as well as what he thinks about the entire market. So watch that exclusive conversation.
One thing which you have to remember is that we are a growing economy, and we are an economy which is evolving. So we have many more sectors, many more companies which are coming up for listing, and which are also growing faster. The other thing is these are entrepreneur-driven companies. So I think in a growing environment, these companies will tend to grow a little bit faster than the larger companies and the overall economy. And I think that is the reason why they tend to do much better. Yes, sporadically, there are companies which go into a over-exuberance kind of a zone. And from time to time, there is a correction which happens. It happened in 2017-18. It happened briefly in between also during Corona also when the market fell. Maybe these stocks fell more. But I think given the earnings trajectory and the fact that the earnings for these companies tend to grow slightly better or faster than the larger companies, I think there is merit in saying that for really long-term investors, who have a view of 3-5 years, these companies can give you better results, but with more volatility. But from an investor's perspective, I think to have a diversified portfolio is better because there might be phases of 2, 3, 6 months where some of the larger companies do well. The other thing is that, typically the domestic inflows, when they happen, I think the smaller companies or the broader markets do well, which has been the case last 2-3 years. If and when the foreign flows start to become positive, it is possible that large caps during that period might end up doing better. But I think we are constructive on the overall market, be it the large cap, mid cap or small cap.
So in terms of in portfolio positioning, Sunil, the template which you followed is 15-15-15. 15% growth, 15% return ratio and P of less than 15. So that 15-15 model, is it still at play in this kind of a market where nothing is available at 15?
No, it is difficult, but not impossible. And Nikunj, it is basically a visible sort of thing. So what we say is out of these three, 2 should be present and 1 should be visible. So, a 15% sacrosanct ROC and ROE is something which allows us to ensure that we make less mistakes. A 15% growth is possible across so many companies. And, if you are able to dig a little bit deep and take, 3-4 years view, you are able to find stocks where even the valuations are in your favor. So it's not to say that every stock which we buy will have this, but at the portfolio level, we are still able to construct a portfolio where these are met. In fact, both our portfolio strategies, one is the all cap, which is a mix of large and mid cap, as well as the second, which is purely mid and small cap, even now have all these three present at the portfolio level.
It's been quite a year. There have been a number of headlines that have dominated, very unfortunate incidents that have taken place across the globe. There's been a lot as well that we've spoken about when it comes to central bank action. What do you think is going to be the big headline, the big talking point? Do you think elections are going to be a dominant factor on the minds of investors while looking at the overall market?
No, obviously, it's a big event. It happens once in 5 years. So you have the state elections which have already started. So the results should be out first week of December. I think those results are more or less known in the sense that almost everyone predicts a close election. So I don't think the outcome of those elections is going to be anything dramatic unless there are big surprises. And in the 24 elections, I think markets are more or less factoring in a continuity. And there is no reason to believe that should not happen, at least as far as the trends which are visible at this point of time. But one thing we should not forget is that this government has been in power for like 9 years and change. First 5 years went into a lot of stuff which needed to be done, which was cleaning the NPAs out of the banks. You had demon experimentation, you had GST and so on and so forth. The second